URL Insurance Group, and I want to thank everyone for taking the time out of their schedule to be with us today. For those of you who are doing business with us, first of all, I'd like to thank you for your support. We know that you have choices as to where you place your business, and we truly appreciate you working with URL Insurance Group. We tell you we'll do everything possible to earn your business going forward. For those of you who are new to URL, welcome. URL is a full-service brokerage. We offer a full line of annuities, both fixed and indexed. We offer single premium life products. We offer traditional life products, and we also have a full array of individual and group health products, including a senior division for MedSup, MedAdvantage, and those type of plans. So please feel free to check us out on our website. We believe it's a cutting-edge website, and it's there for your use to help you grow your business. Our site is www.urlinsgroup.com. Okay, we're very excited today. We have a great program for you. As Senior Vice President here at URL, I oversee the annuity and single premium life divisions. And frankly, the fixed annuity business has been booming the last 2 years. People are finally realizing the benefit of the upside potential of indexed annuities with no downside risk. Income riders have also been fueling annuity sales in the last couple years. But the truth is, sometimes in what I call the sideline money, whether it's savings accounts, CDs, or other funds not really needed for everyday living, sometimes those funds can be better utilized in a life insurance single premium life product. And these products have riders with living benefits that may better suit a client's needs, especially when they get up in the later 60s and 70-year-old age brackets. These products are pretty valuable for them. And there are 2 such products available today from Baltimore Life and that we're going to discuss. And we are very fortunate enough to have Mr. Gary Voigt. He's a Vice President of Corporate Marketing at Baltimore Life. He'll be with us today to review the products and to discuss how they can benefit your clients to the maximization. I just wanted to say before I turn it over to Gary, if you do have any questions on your panel, there is a box for questions. You can type it in, and at the end we will answer all the questions. And of course, you can always feel free to call us after the webinar on the day this afternoon or the days to follow, and we'll be glad to answer the questions for you and get you anything you need in as a follow-up to this presentation. So right now, I am going to flip it over to Mr. Gary Voigt, and Gary will take it here and give us his presentation. Gary?
Joe, thanks so much, and good morning, everyone. And again, a special thank you to Joe had offered you from myself in investing some of your very valuable time today to learn more about Baltimore Life's tax-efficient asset transfer program. We're going to be talking a little bit about the market today. We're going to be talking about product and how you can get that product written with us. But we'll also be getting into some sales and marketing ideas in the time we have remaining today to hopefully jumpstart you into the single premium business. A little bit, we're going to talk about 2 products today, our Generation Legacy and our single premium whole life products. Both products are really designed for your senior clients in mind who have what Joe liked to call sideline or leave behind money they don't need to live on. They simply want to leave behind for the next generation. We have products designed to not only accommodate single premium funds originating from after-tax cash vehicles, but also from annuities and qualified plans. And we'll get into all the details of that today. A little bit about the market before we get started. It's absolutely huge. About $1 to $3 trillion in wealth is being transferred each and every year, and this is expected to continue through the year 2052. We know about 55% of your clients' wealth is moving on to the next generation, to their family members, I should say. About 55% moving to family members, and about 16% of that wealth is moving on to their favorite charities. So yes, 71% of your clients' wealth is moving on to people and organizations they know and love. The question is, are they maximizing the amount of wealth they're able to pass on, and are they doing it in the most tax-efficient way? Well, the first product we'll get into as a solution is our Generation Legacy product. And this product is designed to take single premium dollars from non-qualified deferred annuities or other qualified plan funds not needed for daily living. As Joe had said, sometimes people have decided in life that, hey, I have this annuity, it's doing great, but my only plan is to pass it along to the next generation. And we feel as though this can offer you a great solution for those people who have those type of goals. It is allowing them to leave an estate, and with that single premium, they're able to substantially increase their estate value. Even though annuities are doing well right now, interest rates we're still in a relatively low interest rate environment if you're working with a fixed annuity product. And here's a way to increase their estate value rather significantly. Issue ages on the product are 60 through age 80, and our product very uniquely will combine the issue of, with just a single app you're going to write, two products, a single premium immediate annuity along with a limited premium payment whole life product. One app will issue both products, and once those products are issued, these products are seamlessly administered together by Baltimore Life to give you all the benefits that we're going to be talking about. In the past, if you wanted to create this type of design, you basically had to issue two separate products with two separate apps and administer those products yourself and hope there was enough money out there in the annuity to fund the life product. This is all taken away. We're able to do it seamlessly together. We have simplified underwriting through 4 tables we'll talk about, as well as our accelerated death benefit riders, which truly can provide living benefits to your client at a time when it's needed most. A little about on the qualified marketplace. We know that it's also pretty large, $2.3 trillion of in-force deferred annuities out there. About 60% of that money is in the qualified variety, the IRAs, the 401ks, and about 40% of the money is in the non-qualified variety. Those are those individual single premium deferred annuities that you're selling. As you probably know, with those annuities, even though there's a lot of money out there, a significant share of this money is just simply being passed to the next generation. It's not being used as income. It's simply being passed to the next generation. So with that in mind, the question really is the annuity the best product to die with? We know that if a client has qualified funds and they leave them sitting for a while, at 70.5, there is going to be a required minimum distribution. And ultimately, if they die with that annuity product, they're simply going to be passing that taxation on to a family member. So if they know their plan is to pass it along anyway, is that, passing along that tax to the next generation the best thing? Or is there a better solution? Well, here's the concept. Let's think of a single premium product as a gift your client's going to pass along to the next generation. And inside that gift box, you're going to help your client with the transfer of qualified funds from annuities or qualified plans. With a single app, as I mentioned, we're going to issue 2 products, a SPIA, along with the limited premium payment whole life product. And over a period of either 7 or 10 years, depending on the issue age of the client, Baltimore Life is going to make annual payments from that SPIA to pay premiums on the life product. So what dictates the payment pattern and the setup of the issue of these products? It's the issue age. If the client's 60 to 74, we will issue a 10-year SPIA along with the 10-year life product. If the client's 75 to 80, a 7-year SPIA along with the 7-year limited premium payment whole life product. So here's a very interesting feature of this product, and actually an extremely competitive feature of this product, and that is what happens if death occurs during the period of time while the SPIA is around paying for the life insurance. Well, we know that the life insurance will always pay an income tax-free death benefit that's greater than the single premium, right? Sure. So, but what else happens with this product is that if the client dies during the either 7 or 10-year period while the SPIA is around paying premiums, we will also pay to the beneficiary the remaining payments from the SPIA. So they're not only getting the income tax-free death benefit from the life product, but the remaining payments from the SPIA. We'll talk more about the taxation on the SPIA payouts, but the key is that beneficiaries receiving both. There's really no other company out there that has this type of product that works in this way. So at the end of the 7 or 10 year period, the SPIA has done its job, it goes away, and now the life product is complete. It's a paid up product now. It continues to provide an income tax free death benefit, continues to provide cash value growth on a tax deferred basis, and yes, continues to offer the accelerated death benefit riders that we're going to be talking about. So just to recap, the issue ages are 60 through 80, and we base the pricing on our products on current age or age at last birthday. The reason this is important is because you're going to be transferring funds from other institutions and products, and that transfer time might take 20 to 35 days. During that transfer process, we're going to be actually issuing the policy based on the age the client is the day we receive the funds. Keep that in mind. The minimum premium to get this started is only $5,000. How many clients do you run across out there that have small annuities that maybe they can't renew anymore to another period, or certainly they've told you, if you've asked, have plans to pass that money to the next generation? They're not going to need it as income. These are perfect prospects for this type of a product. Now, the maximum face amount that we'll issue on the life product for the single premium paid is $450,000. We have two underwriting classes, non-tobacco and tobacco, and we will issue within those underwriting classes any risk standard through Table 4 through our simplified underwriting process. And we'll define how that works a little bit more in just a moment. Cash values, they accumulate, of course, in the life insurance product on a non-participating basis. There's a guaranteed cash value there. Partial surrenders, they're available from the life product after the life product becomes paid up. So after 7 or 10 years, when the life product becomes fully paid up, then partial surrenders are available. Loans, they're available at any time from the life insurance product at a maximum interest rate of 8%. So now let's talk a little bit about those accelerated death benefit riders, because these, again, can really provide living benefits to a client at a time when it's needed most. I do want to, provide the disclaimer, so to speak, though, to say this, that if a client truly is interested in the best possible long-term care protection, obviously they should be looking at a long-term care policy that hopefully you can sell them. But many of our seniors, as you know, aren't in a financial position to afford that. And as a result, isn't it nice to know that they can have accelerated death benefits on their life product to provide some cash that are really, cash that they can use for whatever reason at end of life. There are 3 health event triggers that will allow your client to accelerate their death benefits. They're terminal illness, confinement to a qualified nursing home facility, and in those situations of extended care like home health care and adult daycare. This truly can increase the liquidity of the face amount of the life product, and upon the decision to accelerate, which can happen any time after issue, a lien for the amount of money that was taken under the benefit will accumulate at an annual interest rate of 8%. The maximum that someone can accelerate is $250,000. The minimum is $5,000. But the good news is this benefit is going to be paid out once, and it'll be paid out in a lump sum so that client has their cash. Also, the key thing to remember is because it's paid out in a lump sum, these benefits are unrestricted funds. The client can use those for whatever reason they might need them for at end of life. So now let's define these triggers and the percentages of payout. The first one is for terminal illness. Simply put, the client needs to be diagnosed as terminally ill with a life expectancy of 12 months or less to live. And in this case, they could accelerate up to 75% of the face amount. The second trigger, a second set of triggers is for qualified nursing and extended care. So for qualified nursing, they need to be chronically ill in a nursing home continuously for 90 days, but with the expectation of a permanent confinement. And here, too, they could accelerate up to 50% of the face amount. The second trigger under that rider that we're talking about now is for extended care. They need to be chronically ill, have been so for at least 90 days, but now they're either requiring care provided by a licensed home health care agency or by a licensed or state certified adult daycare. And here they can accelerate up to 50% of the face. Now, I know a lot of you are in the state of Pennsylvania, maybe some of you in the states of Indiana. Those percentages are a little bit less, 65 and 40% respectively. If any of you are in the states of California or Ohio, There's some additional restrictions on this rider. So please, if you're in those states, be aware, just like any rider, there can be state adjustments like the ones I've just described. But the good news is the riders are designed to pay cash now, but still have remaining death benefit for the survivor in most all situations. So we talked about chronic illness. What does that mean as it applies to nursing home confinement and extended care? It means one of these two definitions. If the client, let's say, can't perform 2 out of 6 activities of daily living, we would consider them chronically ill. But maybe they're okay on their ADLs, but they could be possibly suffering from a severe organic mental illness such as Alzheimer's or dementia. In either case, we would consider them to be chronically ill. So let's look at some examples of how this rider could pay out. This is the client who is terminal. They have a $100,000 face amount, and they decide to maximize the payment on the accelerated benefit at 75%. So they're able to get a cash payment of $75,000. Now, with any transaction, when we accelerate these benefits, we add a $100 service fee. So the lien is established at $75,100. Now, if this client were to die immediately after getting the money, they would actually have no time for interest to accrue on that lien. So the remaining death benefit would simply be the face amount less the original lien, giving you a remaining death benefit of $24,900. But here's the most likely scenario, and that's where the client lives 1 year after getting their unrestricted cash funds. So now 1 year later, if they die, the remaining death benefit would be $18,892, which is the face amount less the original lien plus 1 year's worth of interest. So as you can see, cash now, still have remaining death benefits later. In this scenario, this client would have to live 4+ years for the interest to outrun the remaining death benefit. And that's why in the state of Pennsylvania, they even want to be more conservative, that the maximum acceleration rate can be 65%, because the goal is to never lose remaining death benefit, to always have some type of remaining death benefit here. So when could the riders technically terminate? Is there any chance they could? Well, there is. What if the whole life policy ends? And you're thinking to yourself, well, hold it. If the SPIA is paying for the life insurance, how could the whole life policy end? Because we know eventually the life product will become paid up, right? Well, during that period while the SPIA is around paying for the life insurance, what if the client comes to you 2 years into a 10-year plan and says, Joe, I really thought I didn't need that money, but now I need it as income. So what they could do is they could stop the life policy and cash it in, which would have very little cash value after 2 years, and they could take the remaining 8 years of payments from the SPIA and have that paid to them as an income. But if they did that, there would be no more accelerated death benefits. Obviously, if a client dies, we pay a death benefit instead. And the other thing to remember is, what if the client accelerates under one of the other riders? Let's say they're in a nursing home and they accelerate at 50%. They can only accelerate once. The riders stop after we pay it out one time. The last thing to know is that what in the very, very odd situation, the lien and the interest exceed the remaining death benefit? Well, technically, if that happened, pretty remote possibility, but if it happened, the life policy could end. In those type of rare situations, the owner may decide to repay all or part of the lien to keep this qualified as a life product. Now, keep in mind that even though we accelerate a benefit anytime after issue, if it's during the period of years while the SPIA is around, the SPIA will still continue making premiums on the life insurance product, okay? You want to keep that in mind. And also know that even though you accelerate a benefit, there's still cash value in the life product that accumulates tax deferred. The key thing to know is that if you have a policy loan on the life product, you cannot accelerate the benefit. So you can only have a lien or a loan, not both. The last thing to remember on this slide is that if you're going to accelerate a benefit under our contract or any company's contract, please make sure your client consults with their tax advisor, because technically these benefits may, and the key word is may, under certain situations, be considered taxable. So here is some potential payouts. This is a recap on this topic. Here's that client who's 70, 50 grand in single premium. We would issue on the life product a face amount at 70 for $78,400 nearly $51. Look at those potential payouts they could get as a living benefit. I mean, this is real money to a senior who at end of life might need some cash, knowing they still have some remaining death benefit here. Not a bad arrangement. So we know the first tax efficiency of this program is that when you pay a single premium into this product, it's providing a much greater death benefit through the life insurance, right? But here's another tax efficiency. It has to do with the rollover of the qualified funds. So you could be rolling monies over from an IRA where the money's never been taxed before, or rolling monies over from an annuity where there's a cost basis and a portion that's never been taxed before. Now we know that eventually Uncle Sam has to get paid, right? So when you roll the money into this product, it's going into a qualified SPIA, and because that SPIA is going to be used to pay life insurance premiums over a 10 or 7 year period, we're able to spread the tax out on that gain over the same 10 or 7 year period. So as a result, the client will get a 1099 over that 10 or 7 year period for the amount of gain that they have to declare as income for that particular year. But they're able to spread it. That's the good news. Now, if you're using qualified funds, the payments we make each year from the SPIA to pay for the life insurance does satisfy the RMD rules. That's a good thing. And the other thing to remember is on the death benefits. If we have a death occur during the period while the SPIA is funding the life insurance, we know the life insurance is always income tax free, but the remaining payments on the SPIA, in fact, will be taxable on whatever portion that's never been taxed before to that beneficiary. Now, the default method that we pay out the remaining payments from the SPIA are annual payments. So if it's 8 more years left on a 10-year plan, they get 8 more years of SPIA payments paid to the beneficiary. But the Benny may say, you know what, I want a lesser commuted lump sum. And in that case, we will commute the lump sum, we will distribute it to them, but they will get a 1099 based on the distribution on the taxable portion. One last thing on tax. When you're writing an application with us for this product, because you're dealing and we're dealing with qualified funds, we always have to ask the question, do you want tax withheld from the money you're rolling over? We have to ask the question, but the way this product has been designed is that we cannot process your app unless you check the box that says you do not want tax withheld from the annuity you're rolling over. The product just doesn't work if we have to do a withholding up front. So please make sure you check that box on the application. So now let's take a look at premiums to death benefits. This is starting to look pretty good because I want you to start thinking now about those clients out there that you have, that you know you've done fact finds on, that have a number of annuities, and their plans are never to use that money as income. They just want to pass it along. So here's the 65-year-old who has 50 grand, and because they're 65, we're going to issue a 10-year SPIA along with the 10-year life product. For the male, the face amount would be $77,361 and change, and for the female, the face is $87,031. So what did you just do for this female 65? You immediately, with the life insurance portion alone, automatically increased her estate value by over $37,000. Nice bump in estate value for someone that only wants to pass that money along anyway. Let's not forget, though, that if this client dies in the first 10 years, the remaining payments from the SPIA would also be paid. Now, if this client thinks, well, what if I left the money in the annuity and I'm making 3% interest and I'm in a 25% tax bracket? It would take her over 19 years just to accumulate the $87,000+ that's paid as a death benefit from the life product. In a taxable investment, that same scenario would take 25 years. The beauty of what you're selling, life insurance, of course, is that the $87,000+ will always be paid out income tax free. So here's the 75-year-old, little older, a little shorter life expectancy, but the numbers still look good, don't they? Because this client is 75, though, we're going to issue a 7-year SPIA along with a 7-year life product. For the male, the face would be $61,516 and change, and for the female, the face would be $67,000, nearly $9. So at 75, you've pumped this lady's estate by over $17,000. The male, almost $12,000. Keeping in mind that if they die in the first 7 years, the remaining payments from the SPIA would also be paid. I tell you what, this product and any single premium product really creates chatter among seniors. They're going to look at this and know, I'm able to pass this much more to my kids or my grandkids or my favorite charities. I didn't realize I could do this. When they buy these products, when they go to the Bob Evans and the McDonald's for their breakfast lunch crowd of friends, this is what they talk about. So you've got a great opportunity here to not only get referrals at the initial point of sale, but ongoing with these clients that are buying these products. Okay, here's a ledger that I'd like to show you that's part of our Secure Solution Illustrator software, which is our online proposal software, and you can also get it through our mobile link software. If you have a smartphone, smart tablet, or your computer, you can basically have a agent guide and calculator tool right on your phone. We'll talk more about that, but if you're playing around with it offline, you can go to mobile.vaultlife.com and get to our mobile link software. I'll talk more in a moment about that. Here's the female age 70, 50 grand in premium in an annuity. Her cost basis is $40,000. And you see in column 3 of this ledger, it shows the $50,000 being rolled in to the SPIA. And out of that SPIA each year, $5,570 is going to automatically be paid from the SPIA to pay for the life insurance premium. Out of that premium, nearly $4,000 of it is excluded from tax. That was part of her basis. And about $1,571 is the estimated taxable income that will, she'll get the 1099 on that has to be reported. But she's spreading that tax out over 10 years. Of course, the ledger goes on to show the life insurance death benefit and, of course, the commuted lump sum death benefit of the SPIA if death were to occur in those first 10 years. So the great thing about this ledger, in a single page, it's able to quickly show the client exactly how their numbers would work for this product. That's our Secure Solution Illustrator software and kind of the ebb and flow of the cash for this product. Applications, how do you submit your business? Let's make this very simple. Out on our agent website here at Baltimore Life, we have product toolkits set up for every product you're contracted for with us. And in those product toolkits, you'll find everything you need to sell and market our products. I'll do a little show and tell on some of those things later. But out there, one of the things is our application and forms package. This is a package where you can quickly generate all the forms that you're going to need by answering a couple of questions. And it's, you can print the forms, you can order forms from us, whatever you'd like to do. It will also have in the forms package a set of instructions that tells you how to complete your apps, how to get your apps to us, but most importantly, it goes through the instructions about our point of sale underwriting process. That's where, as soon as you complete the app, you're going to pick up the phone, contact our call center, and with a short 12-minute interview with your client, we're going to be able to tell you over 90% of the time whether or not this case is approved right there on the phone. So live underwriting on this business for both Generation Legacy and our single premium whole life product. We have a bunch of other great sales and marketing tools out there, and I'll show you more on these in just a little bit later. So let's get into the second product. Let's get into single premium whole life. This is the sister product. This is the product that's really designed with the same concept in mind. I want to create a legacy, increase my estate value with the benefits of a life insurance product. But with this product, there's some key differences. The first one is the origination of the funds. The funds for this product will originate from after-tax cash vehicles, CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. Same goal, client wants to increase their estate value, leave a legacy, but another key difference is the issue age. The issue age for this product is 50 through 85. A little broader issue age is available. We also have simplified underwriting on this product through 8 tables of underwriting. I'll get into that. And we have those same accelerated death benefit riders. This product has riders that give you a little bit more lucrative payout than with Generation Legacy, and I'll show you that in a moment. So 50 to 85 is the issue age. 2 tiers of underwriting. Level 1 is either non-tobacco, tobacco, standard through table 4, identical to what you have with Generation Legacy. But with this product, you have the second level, and that's tables 5 through 8. So a client with a few more challenging health conditions would qualify. So your insulin-dependent diabetics, for example, would fit into that level 2 of underwriting. Same minimum premium, $5,000. Doesn't take much to get this started. Think about those clients that have small CDs and money market accounts that they're basically compartmentalizing their money. This money is going to the kids, the grandkids, the church, or possibly you could be running into this type of a client. That client who you're saying you want to sell some life insurance to, but they tell you, I really don't need any life insurance, Joe. I have a burial account set up. Well, what does that mean? Well, it could mean one of two things. It could mean that the client has a pre-arrangement set up with a local funeral home, or it might very well mean that they have a CD sitting at the bank, say for $15,000, that their only goal is to have their kids realize that's the money set aside to bury them. Here's how that might work. Mrs. Jones, you're 70. You're going to live many more years. What if I was able to show you a way to take the $15,000 in that CD and provide your family with an income tax-free death benefit nearing $25,000? Oh, by the way, if you became terminal in a nursing home or an extended care situation, we could allow you to access some of that cash to help with those end-of-life expenses. So that's the burial account concept. It works very well, and I've had more agents who really weren't selling a lot of annuity business, and they were trying to get started with this, and that's how they got started. They started selling the small face amounts of premium, 5s, 10s, 20s, but then they started doing better fact finds. That's where they're finding the money and selling much bigger premiums. I will tell you that the average premium we see on the Generation Legacy product, by the way, is $60,000 to $65,000. The average premium we see on the single premium whole life product with after tax cash funds is about $30,000 to $35,000. So you do the math on your commission schedules and figure out quickly that not only are you doing a very good thing for your client, but you're doing well by yourself. The maximum face amount for single premium whole life is expressed in terms of the maximum net amount at risk. That's the difference between the face that we issue and the premium that was paid. That difference is the net amount at risk. Cash values, they accumulate, of course, on a non-participating basis in this product, but here's another key difference. Partial surrenders. You can actually, starting in year 2, take a partial surrender from this product equaling 10% of the available cash. In year 3, 20% is available, 30% in year 4, 40% in year 5, and from the 6th year on, 100% of the available cash value can be taken as a partial surrender. Loans, they're available at any time at a maximum interest rate of 8%. So what about those accelerated death benefit riders? Same 3 health event triggers I gave you as we talked about for Generation Legacy, but there's some differences. Still one, you get the money in a lump sum, unrestricted funds, that's a good thing. But with this rider, for this product, because it's a little older product, the states allowed us to set it up on a different payout basis. It's not under a lien approach. It's under a straight payout basis on a percentage. The client can elect to either take the maximum accelerated payment they can and have no remaining life insurance, or do a partial acceleration where they keep a certain amount of life insurance and accelerate the balance. So here's some examples. Terminal illness. Same definition of qualified, 12 months or less to live, but now they could say, you know what? I don't want any more life insurance. Give me as much death benefit as I could get as a living benefit, and they can take up to 95% of the face, let's say $250 admin charge. For qualified nursing, same definition of qualify, but now they could take up to 90% of the face or less the $250 charge, or again, do a partial acceleration. And finally, for extended care, same definition, but now, because they're going to live longer yet, they could take up to an 80% payment, less the $250 charge, or again, always keep a certain amount of life insurance set aside and accelerate the balance of the face at these percentages. Same definition for chronic illness, 2 out of 6 activities of daily living, or someone suffering from a severe organic mental illness. So let's look at these premiums to death benefits. These really are starting to look good because this is that client who, again, has after-tax cash money, leave behind money, and they've got it all compartmentalized to pass out to their family once they die. But here's the 65-year-old with 50 grand. Let's look at these death benefits. The male at level 1 is almost $82,000 of face that we would issue. The female, the face amount would be nearly $93,000. But let's not forget, at level 2, we have that second tier of underwriting with this product. And across all ages and genders, you're going to find that the face amount reduction between level 1 and level 2 is only $5,000 to $6,000. So they're not taking that much of a hit on death benefit because they're in that second tier of underwriting. But, you know, not a bad increase in estate value, right? Here's the 65-year-old woman who said to you, I've got leave behind money. You're able to take a $50,000 premium and give her an estate value that's increased by nearly $43,000. Keeping in mind that if she left the money in an interest-bearing account at 3%, at a 25% tax bracket, it would take her 28 years just to equal that amount you increased her estate by, knowing that the life insurance is always there to pay out an income tax-free death benefit. Here's the 70-year-old, a little older, shorter life expectancy, but the numbers still look good. You can see there for the male, we've increased his estate with that $50,000 premium by nearly $24,000. The female, her estate went up by almost or over $32,000. And again, that level 2 of underwriting gives you about a $5,000 to $6,000 reduction. Pretty attractive numbers, and again, this creates a lot of excitement and chatter among senior clients. Great opportunity for referrals. Same story on forms I gave you for Generation Legacy. Go to our product toolkits, go to the application and forms package, and get your forms. All right, let's get to the point of sale underwriting, because this is really the icing on the cake. Great products, very competitive rates, comp is great, but you know, we've talked to so many annuity producers through the years, and this goes back 5+ years when we started Generation Legacy, who said, you know, I get the concept of asset transfer. I like it. I think it's a good thing, but I hate life insurance underwriting. It drags. And, you know, we said, what if we had a way we could give you immediate underwriting decisions? And that's what point of sale underwriting is about. You write the app, you get, you know, you finish the paper app you're doing, and now you're going to pick up the phone and call our call center and complete an interview with your client that lasts about 12 minutes or less. We're going to be asking them the same health questions that you completed on the paper app. The only difference is when we're re-asking those questions, we fire off in the background the data we need to look at from the Medical Information Bureau and the Prescription Drug Database check. That way, if there's any conflicting data out there in those databases as compared to how they answered the app questions, we can get clarity right then and there and do live underwriting. As soon as the interview is done, any underwriting decision is going to be communicated to you, the agent, not the client. You're the one that's going to let them know whether or not they're approved. We will also, when we're talking to you on that call, give you a confirmation number that we ask you to write on the paper app that you're going to submit. So all the details about completing this call, the phone number, the hours, you know, the instructions, they're all going to be printed out in your application and forms package. You won't have to worry about remembering this stuff. It's all there. Our times for that call center, you see the number there, are 9 a.m. to 10:30 p.m. Monday through Thursday, 9 a.m. to 6 p.m. on Fridays. These are Eastern times. We do traditionally support English and Spanish languages. Other languages are available upon request, and we do have TTY services for hearing impaired clients in English and Spanish. The key thing you have to remember, though, is this interview must be completed within 5 days of completing your app. Now, you might say to yourself, well, you know, Joe, I'm out in California, and you know, I'm writing an app on a Saturday, so it's after the hours when your call center is open. What do I do? It really doesn't matter when you write an app. You always want to end that session with the client by calling the call center, because if the call center is closed, you're going to leave your name and number, your client's name and number, and a date and time you want us to call them. We'll call them at that scheduled time, do the interview, and then call you back with the underwriting decision. If it's during normal business hours, we take care of it, it's all done, and you'll get the underwriting decision right then and there. The key thing is to know these are our 2 biggest selling products. This process works extremely well. I think you can do it with all confidence, knowing that if you have to schedule an interview or do it live in real time, it works very well. Now we have an app for each product. Let's talk about pre-qualifying your apps. First Generation Legacy, the reason we have a separate app for each product is because they are underwritten a little bit differently. For Generation Legacy, we have that standard through Table 4, one tier of underwriting. So we have a Part A. Think of your Part A questions as knockouts. If you get a yes in Part A, it simply means your client does not qualify through 4 tables of underwriting. But if you get all no in Part A, height and weight, MIB history, and drug history looks good, we're going to issue. For single premium whole life, because we have 2 tiers of underwriting, we have a Part A and B. You still here want to think of your Part A as knockouts. If you get a yes in Part A questions for single premium whole life, that means your client does not qualify through 8 tables of underwriting. But all no in Part A and B, with everything else looking good, we're going to issue Tier 1, which is standard through Table 4. If you get all no in Part A but 1 yes in Part B, with all the other information looking good, we'll issue Tier 2, which is Table 5 through Table 8. So with that, I'm going to do a quick transition now. We're going to talk in our remaining time on a little bit on the marketing topic, because I think, you know, it's great to have super products and competitive rates, great but, you know, agents need that support for marketing. What I'd really encourage you to do is lean on the folks at URL, first of all. Great internal support. When you have questions about a particular case, what should I do here? Can you help me with the proposal there? They've got the team in there that know these products backwards and forwards and can help you through that, especially your first couple cases where you're getting your teeth cut on how to get started. But at any time, lean on them because that's what they're there for. But out on our agent website, we've been referring to it time and time through this session today. I want to show you some of the other materials that are out there. And again, your URL staff is aware of these tools, can help you through it. We have product toolkits set up for all the products you're marketing with us. And you see those colored blocks along the top. You'll only see toolkits for the products you're contracted for with us. Inside the toolkits is where you're going to find just a plethora of marketing support materials, not just your forms, but, you know, point of sale support materials, agent reference materials, the printable application and forms package, and just a number of other things, including on-demand training. So we have on-demand training modules out there as well. But here's one of the tools I want to show you that's in the toolkit. One of them is Mobile Link. And write this one down if you don't have your cell phone handy. It's mobile.baltlife.com. And when you go to that page on your phone, smart tablet, or even your computer, anything connected, you'll bring up that center panel that you see there in white. That's the home page for Mobile Link. Basically, this is like having an agent guide right on your device. It gives you the product information, the underwriting guides, as well as a rate calculator. So, I mean, I found myself working with people that I know that have talked on the topic of, hey, I'm setting up some CDs for my kids as a legacy fund. I'm saying, why are you doing that? Well, you know, I'm trying to pass money along to them. Have you thought about this? Well, I get into the topic of single premium whole life, or if it's an annuity set of funds, generation legacy. And they say, well, how does that work? How much death benefit could I pass along? And I pull out my phone and I quickly calculate it right there in front of them. So this is a great way to quickly be able to calculate rates with your client. What you want to do when you get to that Mobile Link site, if you're on your phone, click your settings button on your phone when you're on that page, and it'll be a shortcut that says save this page as a shortcut on my phone. And it'll basically create a little icon or a shortcut on your phone that you now have set up just like any other app, right? Here's another tool that's on the toolkit. It's a point-of-sale presentation tool called Secure Solutions Presenter. Presenter basically is like having an electronic track book or presentation book right on your laptop. You can download this safely. We have a bunch of proposals or presentations out there for you. You can view these with your client on your laptop. You can print them if you like to have a hard copy, or you can email it. But here's what the presentations look like. This is Generation Legacy, very visual, explains the concepts of asset transfer. It explains who it benefits. It gives you key dialogue questions to be asking during the presentation. It outlines the features and benefits. And with Generation Legacy, we use that gift box concept to explain how, basically two products work together as one. We go over a simple example based on ages and gender. If you put so much money in, the impact that can make on your estate value. We have examples of the accelerated death benefit rider. So all that's out again on the Secure Solutions Presenter software that you can download right onto your laptop for use. Here's another form that I'd encourage you to use. This is something that if we talked about good fact finding. The way to write business in this market is you got to find the money. So hopefully you have your own good fact finding tools, but if you don't, this is a good tool for you. In the center section, you can record the client's current liquid assets, CDs, money markets, annuities, and then you can show them right there that if they transfer a portion of those funds not needed for living, the impact that can make on their personal estate. The bottom of the form outlines the client's current income because they want to make sure they have enough income to live on before disturbing those funds. But the top of the form has those key questions again. One of those questions are, Mrs. Jones, do you have money that you'd like to leave behind for your family or favorite charities that's not needed for your daily living? And most people get that leave behind money concept. And if they don't, it's going to create a great conversation. This screen that I'm showing you right now is highlighting another document we have on the site, and that's our single premium sales ideas. Each of these sales ideas comes across with a full description, and as you're reading the full document, my recommendation to you is have a blank sheet of paper alongside of you, because as you're reading these sales ideas, it's going to prompt you to think of people immediately that you can go out and talk to on one of these two product concepts. We've talked about most of these concepts, the people that have annuities that have only plans of passing it along. What about some of those old paid-up life policies you run into where the cash values are close to equaling the death benefit? A client might have 1, 2, or 5 of these. You could actually 1035 that money into our single premium whole life product and give them a higher paid-up death benefit. What about some of the old ULs where the cash values are going in the wrong direction? If you can rescue at least $5,000 of that money, 1035 it into single premium whole life, it's going to give them a greater paid up death benefit. And of course, we talked about the burial account concept. Great way to get started, especially if you don't have a book of annuities out there. We have these customizable marketing flyers for your use. Explains the concept of asset transfer, features and benefits of a product solution, and then you can customize the document with your contact information. You can print as many as you need. You can save the PDF and use it whenever you need. But I've seen agents print a bunch of these off, take the Secure Solution Presenter software, and buy some coffee and donuts and do a stand-up at their local senior center. Not the nursing home community, but the senior center where they take field trips to Atlantic City. It's a great set of tools that can help you do some presentations with clients or prospective clients. We have print ads out there for your use. We have letters. We have phone approaches. We have third-party articles. Now, in a couple of weeks, we're going to be featuring on the toolkit a new white paper on single premium products and the whole asset transfer concept that you can use as well. So all that information, again, can be found out on the Baltimore Life Agent website in one of our many product toolkits. So with that, Joe, I just want to promote one thing before I wrap today, and that's our agent trip. I mean, URL has some great trips. I mean, we were seeing them flash in front of us to start the meeting, and I know you guys hear that a lot from them. They have super trips, so hopefully you're going to be on one of their trips. But I tell you, if you qualify for their trip, more than likely you're also going to qualify for ours if you're writing our business. We have a great agent trip that's next May at the Hard Rock Hotel and Casino in Punta Cana. To qualify, if you're writing single premium business, you only need to write $600,000 of premium to get there. All right? $600,000 in premium. That sounds like a lot, but keep in mind with Generation Legacy, the average premium is $60,000 to $65,000. Single premium whole life, it's $30,000 to $35,000. So it won't take you many cases to get on this trip. And heck, if you qualify for URL's trip, you're also going to be on our trip. Nice to have your vacations paid for. That's a good thing. So with that, Joe, that's a wrap for me, but if you have any questions that have come in, I'm happy to answer those. Thank you very much, everyone, for considering Baltimore Life for your business, and thank you for your patronage to URL. They're a great organization, and we love working with them.
Well, thank you, Gary. I appreciate your presentation today. We don't really have any questions here, but I just want to remind everybody, if you do need a personalized proposal for your client, you can call us. Our number is 800-926-8875. You can call Maria Adams at extension 102, or you can call me at extension 111. We'll be glad to help you. And I'd like to once again thank everybody for their business. Thank you for taking the time to be on our presentation today, and happy selling, everyone. Have a great day.